Ramesh Iyer, MD at M&M Finance as well, joins in on the board. Ramesh, hi, morning. Many private banks have been hiking their base rates, but how much will your cost of funds and margins be impacted?
Rate going up, definitely there'll be an impact on margin, but I think we will also be increasing our rates to the consumers. I don't think we will be in a position to absorb this kind of a rate increase. But let's say a 50 basis point rate increase does happen, we would for sure wanting to increase it also to the consumers out there, or else the manufacturers will need to step in and support it with subventions.
What would be the quantum and how soon are you looking at hiking rates?
We would be doing it immediately. Fortunate that so far the base rate increase, whichever banks have announced, is not yet impacted our borrowings. But as soon as it has to happen, I think parallelly we will do it.
Can you afford
we expect that... sorry, go ahead.
No, can you afford to do that? Because what has differentiated your company from other banks is that your cost of lending are much lower are one of the lowest in the industry.
Cost of lending or borrowing?
No, your cost of lending, the price at which you lend is very competitive. If you increase your lending rates also now, there would be an issue.
I'm not too sure about it, because for simple reason that, as an enabler, ultimately what do? We borrow funds from the system and add our cost, and then we lend it out to the consumer. And therefore, it will be really for the manufacturers and dealers to look at, the enablers have to be supported. If the consumers can't afford that, then I think the manufacturers and dealers will step in, is my understanding, because we can't be absorbing that cost, because at the end of the day, all of us work on a kind of a reasonable margin, and there may not be enough room left for us to kind of further cut on the margins to be able to support volumes.
So what is the quantum of rate hike that you're looking at? 25 bips, 50 bips?
Normally what we've done as a practice is up to 25 basis point increase. We don't really pass it on to consumer. But if it had to accumulate and become a 50 basis point, then we at one time increase 50 basis point. So, up to now, if it is 25 basis point, you will not see us pushing up the rate. No sooner it happens to be a 50 basis point, you will see a 50 basis point increase from our side to the consumer.
Ramesh, what is it that you're sensing about cash flows when it comes to the rural market segment in which you operate? And are you witnessing a stress in the rural markets as well because of the slowdown?
Fortunate, not so. I mean, if you kind of look at state by state, there may be some states which have gone slow, like we did witness in the last about 6 to 10 months, the southern states have been going slow. But as against that, we have found a better buoyancy in the northern states, etc. And fortunate good monsoon this year. We do expect the yields will be good, maybe the support price will be good, and both this together, the cash flow in rural will definitely hold on. And, if you look at our first quarter numbers, you will see there's not been any stress in terms of our recovery is concerned. And we've gone through it well all through there. And I must tell you that the rural cash flow is not just dependent on farm output. It's also dependent on various other activities like whatever local level projects, etc. are happening. And that's supported well over a period of time. And of course, monsoon is a huge positive sentiment.
But if I map your Q1 numbers, there is a hint of slowdown. Do you think what you reported for Q1 was a one-off that was largely cyclical in nature, and that is not the true reflection of what you could report for the rest of the year?
If you kind of look at historically our last 10 years, if you kind of look at, you will always find the first and the second quarter, there would always be a little increase to the overdues, etc. Because they are clearly a cyclical one. And second is, if you kind of look at the climatic conditions, monsoons have been a little early this year, which has kind of delayed the operations for about 2 weeks in June itself. And therefore, we're not overly concerned on what little happened. But I must tell you, right as I said earlier, that the southern states did go a little slow, and it had its own impact in terms of the overdues are concerned. Part of Maharashtra, which did not have adequate water last season, there were economic slowdown. So if you kind of add all of this, a little increase in OD was there in the first quarter. But clearly, with the way the season is coming out to be, we do expect from the festival season going up to March, one should see much, much better performance from all the states.
Ramesh, there has been a slowdown in terms of vehicle finance sales volumes as well. What's the demand on ground when it comes to auto, utility vehicles, tractors, cars and CVs?
I think tractor, if you see, the first 4 months have been phenomenal. I mean, if you look at the growth of tractors compared to last year, first 4 months, there's been a huge growth story, and therefore tractor is turning out to be a bigger number story as far as growth is concerned. But fortunate that, rural market, again, almost all manufacturers are reaching out to that market for their sales. We now see every brand of vehicle there. And for somebody like us who got such a deep penetration into the rural market, I think it's a clear advantage for us to be able to finance every vehicle. But yes, overall volume, there is a slowdown. One is clearly seeing the inquiry levels of the dealerships are not as exciting as one would have liked it to be. But another important feature from a financial perspective, if earlier 100 vehicles were sold from a dealership, almost about 20-25 vehicles were being, cash purchase, full cash paid. And, what has really declined the volume is the full cash purchase have gone off. So therefore, the volumes available for financing actually has not gone down. And that's what you will see the numbers from finance company. Even though overall volume has come down, the finance company numbers are not coming down because the volumes available to finance companies have remained where it was.
It's a small portion of your revenues, but what about the home finance vertical and insurance? How have they been panning out in the last 3 months?
See, rural housing, as I said, is a great business, huge potential. We are kind of very, very small at this stage, just about 1,000 crore balance sheet is what we are managing. And the potential is phenomenally large. And it's a very need-based funding that we do, small ticket loan. And it has absolutely no relevance to the economic cycle. Clearly what we saw even in the past is the ability of the individuals to divert some cash flow for this kind of an activity. And where we have stepped in is to say, we will provide you the loan and you pay us over the cycle. So we see that business continuing to maintain growth rate as we've always seen in the past, and we are very, very small player, and therefore the potential is substantially large. So far as insurance is concerned, it's clearly a synergic business where all vehicles and tractors that we finance, both vehicle and customers, is what is insured by the insurance company. So I don't think they have a big issue related to the business growth is concerned. About 30-35% is what is their penetration, and they have a big headroom to be able to grow that business.
There are big numbers which are floating around. Then what could be the eventual size of your home finance book? So what is the current size, and what could be the size of your home finance book in next 3 years?
See, currently, as I said, we run a balance sheet of about 1,000 crore, and we ourselves have said that by 2014, it has an ability to manage about 4,000 plus crores of balance sheet. And clearly that's a potential. We are today there in about 7-8 states, and we've been adding about 2 or 3 states every year. So by 2015 we will actually be in about 10-12 states, and that should get us to that 4,000 crore that we are really working on.
Ramesh, typically NBFCs, they always tend to gain when there is an economic slowdown. Do you think the current economic slowdown is some kind of a blessing in disguise for you?
I am not sure whether one should call it as blessing in disguise, but as I said, the overall volume available for financing is intact, even though the cash purchases have come down. So that's one thing to look at. Second is, in a situation like this, the second-hand vehicle sales do pick up. And that opens up a new opportunity for NBFCs who are willing to participate in the second-hand vehicle financing. So that's the new opportunity clearly available. And yes, you're right, in the past it's always been seen that, whenever a cycle like this comes, the NBFC do perform better, because most of the time we see that the banks do go a little slow in the retail financing in a cycle like this. And therefore that is the additional volume that gets available to an NBFC to be participating in. I think put all of this together, definitely NBFC will have a decent role to play even in this scenario.
Let's get a guidance going from you then. Your disbursements in the past have managed to grow in the region of about 30% plus. Are you confident that this run rate is here to stay? Up until now you've delivered, but economic conditions are changing. Are you confident that a 30% plus disbursement growth is what you could deliver for next 4 or 5 quarters in a row?
I may not want to put a number, but I want to tell you that strategically we continue to add branches. We are adding people to be able to service customer from those branches. We have become a multi-product company, and as I told you, we have an opportunity to really participate in every manufacturer's product that gets sold in the market. And we have a huge and very large customer base in the villages. We work in 170,000 villages of the country. And when we reach out to our customer who want to sell their current vehicle to somebody else who's looking for a second hand and want to buy a new vehicle, is the activity that we participate in. And we are generating about 15% of our monthly volumes on our own. put all of this together, we're not overly concerned as far as the asset side opportunity is concerned.
Ramesh, there are some media reports which have been talking about some banks looking to buy retail assets of various NBFCs in order to boost their retail asset book. Have you been approached by any bank on the same, and if so, how beneficial would it be for you in the first place?
I think our stand has been pretty clear that we are building a balance sheet, and in fact, we look for buying of assets if any available. So therefore, possibly, that news is available for whoever is looking for buying assets. So we've not been approached by anybody.
What is in store for Mahindra Finance in next 2 or 3 quarters? Where will the surprise or disappointment could come in from?
I'm not too sure, disappointment, but I think strategically this year as an NBFC, we would actually focus on the liability side. The asset side, as I explained to you, it's pretty intact in terms of our reach, our customer base, product financing capabilities, etc., etc. If at all on the asset side, the concentration would be to ensure that collections are well maintained, there are no surprises or shocks coming from the NPA front, none as indicated as of now, and therefore we want to remain up there. The real focus of our attention or strategy is going to be on the liability side, continue to borrow to a matching asset. We're on an excellent ALM today. We absolutely have no problem in terms of asset liability match is concerned. And therefore, the focus will continue to be broad-based, get into, as many products as we can on the liability side. And within each product, broad-based the number of participants. Focus on our deposit program. We currently have about 7-10% of our borrowing come from deposits, and we continue to focus there. I think put all of this together, but 2 big things that we're going to work on which will help organizations sustain, grow from here is going to be investment in technology space, which can help not just the control part, but bring down the transaction cost. And also on the people front, this is a real good time to be investing on people capability building. You get challenges to be seen, explain to them the method to handle. We have 5 training academies across the country where we are actually training our people on the transaction handling in a much better way. So I think technology and people would be the concentration strategically on the liability side, and I think focus on controls on the asset side. So I'm not too sure if there are going to be any shocks per se, but likewise, we're not wanting to put out any surprises. I think it's a well-set, sustainable business model which will try to grow.
Ramesh, good chatting with you. Appreciate you taking the time out and speaking with us.